Hey guys, Mike here. So, oh boy, what a day in the market yesterday. SPX finally hit 6,600, but more importantly, we got to talk about Tesla. I was going to wait till tomorrow, but something happened yesterday. So, again, Saturday, we answer your questions. It's more of an educational thing for me and you. So, oh boy, we're going to go into it. We used to talk about this about 3 years ago. I did a detailed video on this, but it's been a while since I've seen this level happen, okay? And so we're going to go into that. You'll get to see it. You'll be well versed in what is going on, okay? Then we'll go into a stock somebody asked about, which I've forgotten all about. I mean, there's too many stocks out there. Believe it or not, after what? 25% back-to-back moves on the S&P in 2023, 2024. Who knows where in the heck we're going to end up after at the end of this year. But this stock is still in stage one. Again, for those who don't understand that, there are 4 stages. I'll take you through it. Very important for you to learn that as well. And so this stock has my attention because stage 2 is the big one, okay? And so that's the big move. It is almost there. And so that's why, and they're talking AI now and woo, all that fun stuff. And we'll get into a lot of other stocks and everything you like, especially one question which somebody said, how in the world is the economy holding up with all these announcements of layoffs? And you see the jobs data coming out, prices through the roof. I'm going to show you a stat that, some of you it might blow your mind. It don't blow my mind because I got this channel and I research stuff all the time. But it's definitely answers a lot of questions, okay? So let's just get into this with Tesla. Understand what happened to Tesla. This used to happen in 2020, 2021, all the time with Tesla, okay? Remember the gamma squeeze. Gamma squeeze, okay? This is what's happened. So it's a measure of how quickly an option's delta changes. Don't worry about that part. As the underlying stock price moves. Here's what you need to know. Don't worry about trying to be an options expert. When a large number of short-dated call options are bought, which a lot of people, including myself, bought those 0 DTEs because it was Friday yesterday, okay? So they expire at the end of the day and they move fast. Market makers are forced to buy significant amounts of the stock to hedge. They are trying to stay neutral, okay? This triggers a gamma squeeze. Let me show you what a gamma squeeze looks like. Here's 9:33 in the morning. I post watch 6,600 gamma level and also watch Tesla see if start flooding into these calls because nothing else moving. It's only 9 million in premium at this point in time. Okay, and you can see the little lines moving up. This is only 4 minutes later. I come in here, I go, oh boy, here we go. So Tesla's going the opposite way of the market. The market's pulling back. Tesla is gone. And I mean within like 4 to 5 minutes, all of a sudden, we end up going from 9 million in premium. Let me zoom in on this for you so you can see it, to around 31 million in premium. So this starts to boost real fast. And then stock's starting to move. Again, a couple minutes later, now we're at 40 million in premium. Then we go back. Again, I'm already in calls at this point in time. We're starting to break some major levels. Here's me saying, wow, at 9:51, 18 minutes later, this thing is just tearing through the weekly imbalance, which if you see that, I've said before, if you see imbalances, which are all called fair value gaps, if you see it just disrespecting it and blowing right through it, it means we're going higher, okay? And something's happening underneath the hood. So then all of a sudden we're at 51 million in premium. You can see the yellow line, that's the call premium. Blue line, I believe that is, that's Tesla. I'm colorblind, so I say I think that's blue. Then you get 9:54. Just 3 minutes later, we've already mitigated the weekly FEG already. So within 20 minutes of me putting the first one out, we've already mitigated. We're already at 63 million in premium. So it is zooming, okay? Then we go back into the Discord here and I say, wow, I went ahead and sold my 0 DTE calls for 387, which was my price target. And so about 300-something%, right? So that was nice. And the way to bring in the weekend, all the good stuff. Love the pure manipulation, all about premiums and no fundamentals, LOL, which that's what it is, okay? So again, we go down. You can see the chart down at the bottom there. I mean, it's basically going parabolic at this point in time. Slight little pullback there at the 387, 388 mark. Then at 10:27, around 10:30, I say, wow, look at this premium coming in. Now it's up to $133 million. I'm like, holy moly. Okay, still going. And you can see the chart. Blew through the weekly fair value gap. Now we're heading up above right here. There's a gap right there. And I'm like, oh, man. And so after all was said and done, this was recorded about 2:30 on Friday. You can see it's about 232 million in call premium. And we'll see where it ends at the end of the day. But my God, that right there was crazy. Those, I think the calls I ended up having, they went up like 700%. And this is what I tell you, especially in something like this, I don't really short to begin with, but I never short Tesla because you can get just wrecked. And so many famous investors have been wrecked when it gets in that squeeze, man, there's never been a stock like it that I know of. Let me know in the comments if you remember one. I don't know if there ever be one, since. And eventually what'll happen is you'll see people who own at least 100 shares or more, they'll start selling calls. I already know they're itching to do it if they didn't already do it on Friday, okay? Because they can get a lot of premium for those calls, and their shares will get called away if it goes up, but they'll go pretty far out. They'll probably go 420, 450, whatever, because you get a crazy amount of money for it right now, okay? And so we'll see what happens, but that's what a gamma squeeze is. That's Tesla. That's how it moves. Okay, remember they've sold no robots, the car sales are disasters, all that fun stuff. It don't matter. When this thing gets in a squeeze, it's a squeezy squeeze. Okay, it's all based on that chart. I showed you how many times that it comes down and just searches out liquidity here and there, blah, 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 and all of a sudden you get this run. You're like, holy moly. Okay, and when it's straight up, that lets you know. NVIDIA don't do it. Meta don't do it. Netflix don't do it. Apple, Microsoft, Avgo, none of them do it. Just Tesla. Okay, that is it. And so we're going to see, again, as I'm recording this, I don't know if they'll get to 400 today or fill that gap, but we're almost at the end of the day. Or they'll wait till next week, or it just sells back down. Will 400 be, a psychological level? We don't know. It's in that gap, though. So, yeah, that's it. So, hopefully you got to ride some of that up. I was happy with 300%, but then I went, wow, 600% sounded even better, didn't it? So, but it's crazy. I mean, there were people that were in calls that were like, I think out to January or something, maybe. It was really way out there, like 100% up already, and they just bought them. It's crazy how that works, but, and again, you can get wrecked, so be careful when you're playing with options when it comes to Tesla, okay? Now, hopefully that makes sense. And again, if those who want to know how I'm tracking that data, just look in the description. It's called Quant Data. They got like a 7-day free trial. You can give it a shot if you want to. But everybody asks me that, so like in every video, so I just put the link down at the bottom if you want to give it a shot, all right? Now, next one says, how in the world is the economy holding up so well with the jobs data looking so weak, and every day I see layoff announcements from tech companies? Is it the quiet QE from the government that you always speak of, or something else we are unaware of? Thanks. And yes, it's definitely QE. There's no doubt about that. But there's one very important statistic which proves a lot of things here and answers a lot of questions. But this to me is what is holding up and really reshaped the economy as a whole right here. The fact that the top 10% of U.S. households now account for nearly half of all consumer spending in America. Analytics analysis is showing this group is responsible for 49.7% of total spending. This represents a massive increase from 36% over the last 3 decades to half now. And so this is being caused by what? The wealth shift. You look at this. To be in the top 10% financial in the U.S., you need to exceed the following thresholds. Either your net income is worth about $1 million to $2 million, or household income is around, I've read anywhere from $190,000 to $250,000, okay, as a household income. And so it varies depending on location. Obviously, Alabama will be different from California or New York, all right, because of the wages you can make there. And so this, to me, is a great visual to say, yes, there has been a wealth shift over the last 20 years, especially to the upside, right? A lot of us have got to enjoy that, all right? But, and then again, it also answers the question of why you see so many angry people. Because when a certain part of the population is worth more than half the country, and usually that half the country is working back-breaking jobs a lot of times, and they're not really, getting any of this or feeling any of the fruits of the laborers and getting to enjoy the ride up and all this other stuff because they don't own appreciating assets, whether it's stocks, crypto, houses, whatever. So yeah, I think that's why it's holding up. But right now, as the wealth moves up and they can just continue to spend and spend and spend, eventually it will catch up to us. Yeah. I mean, it's not good for society. A lot of us are enjoying it, but it's not good. I mean, seriously, I come from the other side of the tracks. I know how it feels like to be on that side of the tracks. So, and it ain't fun. Anyway, hope that helps. Next one says, hey, Mike, thanks for all your hard work. I wanted to ask you about Open. What's your take? Can it shake off the meme label of late with the new CEO's appointment? Thanks. Well, it's hard to shake it off just because, again, when you have a short float like this right here in the 20 percentile, I don't know where it stands now. And yeah, it's squeezing. I think a couple things are going on. It's squeezing, front running rate cuts. Obviously, it's in the real estate side of the business, which has been down, all that good stuff. And all of them, real estate stocks are going up. But I mean, look at that. That's a monthly chart. Look at those 3 monthly candles. You'd be hard pressed to find any chart that looks like that. Now, it's at a key level. It got rejected at a key level. Can it get above it? Sure. Can it continue to squeeze? Yeah. Can the CEO do a great job of turning it around? Because obviously the stock sold down 99% for a reason. It wasn't like fundamentals were great. It wasn't like earnings were great. So can he do it? Sure. I don't really know much about the guy. I know he comes from Shopify and everything. Successful company right there. So we're going to find out. but I mean, that's a big squeeze. But you see last time, like when it squeezed up and came down, it hit a key level and then it bounced and just kept going. And so can it become, I guess you say, a legitimate company? I think what you're asking me. Sure. I mean, you come down, you start building out that first box right below it as support, start showing that you're actually, beating your earnings and EPS estimates and things of that nature. It can. I mean, no doubt about it. But right now, it's definitely a stock that's short squeezed, and we'll see if it turns into anything else. And rate cuts should help it, you would think, if the real estate business, gets going again. Next one says, Mike, can you show us the chart of TLT and your predictions? Thanks. Yeah, I can show you the chart of TLT for sure. Obviously, like I said, this will depend on yields, right? And I told you guys when we did this, yields were coming down into the 0.79 fib into a bounce area, and they bounced, okay? This was coming up into a what? An imbalance, which is where things normally slow down. It's a good draw for it. And you can see just like that, we hit the 0.79 fib, we bounced. Now, the inflation data came out. We're going to have cuts next week. Here's the big thing. Well, we don't know, and nobody can tell you this. Currently, the 10-year is not going with the Fed funds rate. It normally does. It usually actually will lead the Fed funds rate, the 2 and 10-year and stuff. And you look at them, they're actually going down before they start to cut. And that just hasn't been the case since they did this cut. But if you go back and look, here's what normal looks like. Right here, when we started cutting in 2019, the 10-year is already going down. The other yields were too. And then it definitely dropped off a cliff right there, and TLT went up. Okay, because TLT is the inverse of the yields. Go back to 08, same thing. But you see this one when we cut, look what happened. We did the cut, initially started to drop, and then it just rocketed from there. They did 2 more cuts after this, and it just rocketed. It went the total opposite way. Mortgage rates went up, all this crazy stuff. And so if the 10-year falls back in line and starts following what's supposed to be happening with the Fed funds rate and all the other yields start to drop with it, then yeah, TLT can do pretty darn good. But if it doesn't, then it's just not going to happen. And so that's what we're looking for to see if that's going to happen. And what's crazy, when you pull out TLT, man, the thing was at 180. But how it got to 180 was, we realized the reason why it went up there is because the government was the biggest buyer of bonds, and they were suppressing rates down to zip, is what they were doing. And so did I expect to get there? No. Now let's go down to 0 again and something crazy starts happening, but I don't expect to go that high anyway. And so the next levels I'll be watching for is like 94. I'll be the first one to see if that actually gets hit. And then from there, I mean, maybe you get to 102, 115, something like that, just depending on what happens. Remember, TLT goes up the largest in recessions. We're not in a recession, and they're not going rates to 0. You can forget about it. Next thing says, what's going on with Marvell? I don't really follow this one. I know it's a semiconductor. I know they sell the product side of that as well. Obviously been a loser so far in this whole thing. I mean, I guess they don't have much respect in the semiconductor industry, it seems like, because the chart's telling me that. Again, you probably know more about it than I do, but just looking at the chart, clearly, I see a trend line I'm going to throw on this thing for sure. I see a gap I'm going to throw on it for sure. And, if it gets above that, fills a gap, see if it gets rejected. If not, then we'll start to break out. Maybe you start to see some laggers. But this one, what this needs is some kind of AI headline and some definitely good earnings. Okay, that's what it needs. Because you can see if it gets above 75, like, it can fly, because anything above that has just been a crash or a skyrocket up. So it has the potential to do crazy moves. There's no doubt about that. And, you can see the 200s curling over, the 50s curling over. So you got to get above that as well. So we got to look at the gap fill, the trend line break to get above the 50 and the 200. And then you're talking. But it just needs like an MU moment or a Taiwan Semiconductors moment or an Avgo moment, one of those. I mean, that's just what you got to have. And it just hasn't had that yet. So, we'll see what happens. Again, if it breaks down below 68.47, I mean, you kind of see how key that level is, then this one's even in more trouble. But right now, you just got a lot of other semiconductors just sucking up liquidity for a reason, because they're doing really, really well. And this one just isn't. So we'll see if it gets its AI moment. This one right here is interesting, though, and I appreciate you bringing this to my attention. I used to track this, and I stopped a long time ago because it's been such a loser. And it says, not to be mean about it, but you can see the chart, you understand what I'm talking about. And it says, what is happening with UNH software? Why is it going up so much? Nobody talks about it. And I'll talk about it because you brought it up. It's in these 4 stages, right? And it's in stage 1. After all of this thing is in stage 1. You can see stage 2 is the biggest one. This is like Weinstein's 4 stages. We'll talk about the moving average you see there, the 30-week and stuff. But when you go over the chart, look at this chart, and then look at the chart of Unity software. Look at that. Still in this area. And of course, it's come off the April 7th low and rocketed higher for sure. But it's still in this area. Now, when it breaks out of this area, if it does what all the other stocks done, it's going to have a huge move on a technical basis. I can't predict what they're going to do with AI and all this other stuff. But if it does, and it's hard to believe. I mean, think about that. How this stock is still on stage one is amazing. Like, their executives must have tried really hard to stay there. And again, it's up 214% off the low. But look at the other stocks. And so that's clearly a stage one. And I used to do like charts on these in the Discord, showing what's in stage one, what's in stage two, and there's the moving average, right? So it's above the moving average. It's been above the moving average multiple times. Never was able to break out, but now it's, you know, pretty heavily above the moving average. And so, you know, we're gonna get to see if it breaks out above this zone. And what it reminds me of is Art K. I remember showing this video many times, or this chart. I remember showing this chart many times. This is the prime example of the 4 stages. It's set right there in that zone. We put the box back in. It was here forever, for like 2 or 3 years, right? It broke out of it. Then we had the crash in 2025, and that brought it back down. If we didn't have that crash in 2025, this thing would have still been going. Now, when you look at the momentum, I mean, clearly on the weekly, you know, it's getting a little overbought up there. You know, again, on the daily, it looks fine. You know, so it has the momentum and stuff. And so I don't know if it's going to have a pullback or not, but once it breaks out of this area, it's got a shot. Again, I can't predict what they're going to do on AI. I can't predict the earnings. And so let's put some targets on here, or at least what would be resistance and target, so to speak. One's going to be around 77 right there, as you can see. One's going to be around 75, as you can see. The other one right here is going to be around 64. And then that one area in July of 2022, we're trying to break out at 58. Right, and that's big moves. If it can get you to those 3 targets, it's big moves. So let's see if they can run the AI platform. They've been announcing AI stuff, and hey, Unity new AI ad targeting platform and all this fun stuff. So we'll see if they can continue that up. There's not a hot topic right now, right? It's all about semis and this high beta, like low float stocks right now. So let's find out. I'll keep an eye on that one. Next one says, I know you covered CrowdStrike before, so what are you seeing in the charts now? Also, is UNH really going to fill that huge gap now, or do you think it gets a pullback first? Oh, CrowdStrike, simple. I mean, we talked about this one. Came down the golden pocket into an area of support right here, which was resistance. Also, the 200 moving average is there. It got 2 bounces now. And so again, once the stock goes down like 20-25%, if it comes in at something like that, it's usually going to get a bounce. Now, is that a sustained bounce? We will find out, okay? You can see it's finally above the 50 on the RSI right there on the daily. You got a bullish MACD cross, but it's not above the 0, okay? Weekly on the RSI is trying to get above the 50 right there, and you're trying to get a bullish MACD cross. If that happens, sure, CrowdStrike can absolutely start running higher and continue up. There's no doubt about that. If the market shows weakness, obviously this thing's going down with it. You can see where the first, you know, resistance is really going to be in this area up here, but also at 447.50-ish, somewhere in there, because that's where the 50 moving average is. It will move. There's the 200 like I talked about. Tested it like 6 times right there and bounce. So that one is good for now. Again, break the 200, break that area. You know, say la vie. Now, UNH, exactly what I told you guys. I've been saying it for days. This anchor VWAP right here from the all-time high is going to be resistance. What has happened? It's resistance. That doesn't mean it's going to crash down or anything like that. It just means it's resistance. These anchor VWAPs are very powerful. Why do I know that? Because I can just follow it and see how many times it was resistance and support and all that stuff until it started just, the stock just started plummeting, okay, off a cliff. But you can see many times right there. So we kind of knew that was going to happen. It was a give me. How it made it to there, it just on that stock, it's these other healthcare stocks saying, hey, the insurance company going, we'll go ahead and we're going to say 2025 is going to be exactly what we said it was, and reinstate this and reinstate that and whatever. And so that's what's helped push it to that at this point in time. If it gets above that, especially, you know, if it starts bouncing off of it, treating it as support, yeah, it'll go ahead. I mean, it ain't even got that much farther to go to actually get to the gap fill, okay, which I think it's like what, 372 or something like that, and then targets above that are the 200 moving average and the 200 weekly moving average eventually. That might be a while. Now, especially if tech starts to run again. At 50 moving average, I want to look at this one because I want to look at it, see what it was doing. And the good thing is it's been flattening out and starting to slowly turn back up. That is a bullish thing, not a bearish thing, okay? And so again, it's funny about it. I don't think I've ever owned a healthcare stock in my life, but I own like 2 of them now. So, and they've been very good. So yeah, you get a value deal going on. There's a reason why Buffett bought this thing where he did, because the risk reward was really well. All right, next one says, hey Mike, here's a question. What are your thoughts on Trendline placement? Do you use the tips of wicks or the open and close? I'm a long-term trader, so looking at more of a daily, weekly charts. I feel like I'm improving with this thanks to your channel. Well, I'll tell you this right here. If you even Google it, there's no certain rule to this. Just whatever gets the most hits. That's really what it is. And I'll give you a prime example. Adobe. Somebody's asked about this for earnings. You can see when I drew this line, it goes back to 2018, some were wicks were hitting, some were bodies were hitting. But I said, boy, coming into earnings, this is a good thing. And what happened? Did it break that trend line? No. Probably about 3 to 5%, whatever it was. And so, again, you see wicks and bodies, but the trend line has held. Okay, so you can do it however you want to do it, whatever gets the most hits. Some people just do the bodies, some people just do the wicks. I say whatever works for you. All right, and if you see it working and the trend line's holding, okay, and getting bounces off of it, then that lets you know you're doing it right. And every stock's gonna be different when you look at it. So, but again, if you just Google or ask ChatGPT, it'll tell you the same thing I just told you pretty much. Hope that helps. The next one says, could you give a quick breakdown on how Fibs work? Saturday would be cool. I'll do a quick breakdown because I've talked about Fibs a lot, and it's one of those things you have to just play around with and watch like massive, like long videos on to figure this out. But all I use it for is to know if I'm in a discount or a premium. This is Tesla. This is Friday. So this is yesterday on a 5-minute chart. You can clearly see when we start to come down, all I'm doing, I'm taking this fib right here from 0, and I'm drawing it from that swing high to the swing low. The fibs, you can see the numbers here. All I care about though is 0.5. The golden pocket on mine is 0.61 to 0.65. A lot of people just have 0.61, which is fine. Then 0.79, that's the other one I care about. Those three. Because once you cross down below the 0.5, you're in a discount. Once you cross above the 0.5, if we're going up, you're in a premium, okay? And so that's all I care about. And you can see Tesla, what happened? It comes down here, it hits the 0.79 fib to the peak. Also, I'm also not just looking at fibs, not complicated. I'm looking for an imbalance of at least 5 minutes or larger. And again, this is a discount. Now we're in a discount, okay? So it's better to buy a discount than a premium, whether you're investing, whether you're swing trading, whether you're day trading, whatever it is. And so you can see right there, the 0.79 fib lines up with the area that was resistance. Also, there just happens to be a 5-minute imbalance, FVG, whatever you want to do. Look it up if you never heard that before. And if you never heard it before, it's because you never watched me before. And you can see the bounce it got, not just once, but it got it twice, right? And so I know people that will literally swing trade futures, and as soon as you hit a 0.5 fib, let's say we're coming down, they'll start buying longs, and they'll keep buying longs. So we hit the 0.79, and probably 90% of the time, they're right. And they're day trading, by the way. Sometimes they're swinging into the next day, but usually that's what happens if you look how a chart moves and stuff. And so, you know, it came up, and then it came back down, hit the exact same level again, and then from there, it took off again. And so, you know, I've showed, I don't know how many times in the weekday videos, just how important these are, but a lot of people just don't like to use them, which is fine. Maybe they look intimidating, I'm not sure. So big move up for right there. You see it came down again right here. We had an imbalance. I drew the fibs. There's the 0.5 fib. This time it bounced right between, so it came down to discount, and it bounced in the discount window once again. Okay, and actually, don't worry about the trend line thing. I just had that to see if it would break. But, you know, this right here, you can see right there between golden pocket and 0.5 fib into an imbalance, bounced perfectly to the penny, and away we go. So that's kind of how it works on like a day trade or something. For me, at least, that's how I do it. And then like for investing, you saw NVIDIA, or swing trade for that matter. I told you guys, wow, it's coming down this golden pocket, man. I just don't know, you know, if it's going to get any lower than this. It could, but it's already in the discount window. What do you get? 10% bounce. You know, so that happens, especially on these big important stocks like NVIDIA, maybe a Taiwan Semiconductors, Avgo. We talked about that one, how it's coming down to a fib and it got a huge bounce. If you're coming into earnings and you're sitting there, they're like a 0.79 fib, something like that, you'll see just some massive bounces. So, you know, and then you see it coming up, and then you draw the fibs back up and you go, wow, where did it reject at? Where did it stall at? Right on the 0.79 fib to the penny. Look at that. And all I'm doing, going from the swing low to what was the high of it, right? Where it started to come down. And you can see it. I mean, it don't mean it ain't gonna make it above that, but you can see where it rejected, right? You can see where it's holding at that golden pocket area. So, you know, these are pretty powerful, especially, you know, when you put them with other things like imbalances, moving averages, levels of support, things like that. Very powerful. They've been around a long time. It's all about a math equation, all that fun stuff somebody figured out. So, you know, and what runs the Wall Street computers? What do computers go off of? Numbers. You know, it's all ones and zeros, they say. So anyway, hope that helps, guys. Really enjoyed the video. Thank you for the questions. Think about hit that like, subscribe button on your way out. Definitely give it a thumbs up, please. Think about sharing the video. Think about signing up for the membership. Less than McDonald's combo right there at $7.99. It's everything you get with it. And I think I even have members videos on fibs and everything else you can imagine. Fair value gaps and balances, all that fun stuff. And also, if you want to try out QuantData, just hit the link down at the bottom as well. And I'll see you guys tomorrow to set up another fun week with the Fed meeting coming up.